You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPIKES volatility products. SPIKES options and futures are traded on the SPIKES Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about SPIKES at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the vol market? Well, let's find out together. It is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling network upon which so many of you are mainlining these days. If you're one of the legion of on-demand folks, again, coming off July, the hottest month in the history 15-plus year history of the network. I have to keep adding that in because we've been around for a bit there, so it's more impressive even than it sounds. And, of course, if you're on one of the many on-demand listeners, we love you all. Keep rating, reviewing. Really does help the new folks discover the content out there. And, of course, you want to go above and beyond. You want to get more content in your lives, like Options Oddities coming up after this show. You don't want your broadcast week to end after Volatility Views. You want more living in your ear holes after this. Well, we got you covered. Options Oddities coming up a little bit later today. Got Pro Q&A. Scott Nations, creator of VolQ, very active in the vol space. Having a hard time today. Very active in the vol space. Coming back in exclusively to answer your pro questions next Tuesday. So get in there. Theoptionsinsider.com/pro is the place to go. By the way, Scott loves it. He can't get enough of answering your, he'd be in there like every week if we let him. So get in there now. Theoptionsinsider.com/pro is the place to go to join the party. Of course, you can join us live here for this show, everything else we do here on the network, access to our pro podcast feed. Lots of great, cool, fun stuff, giveaways, all sorts of goodness. Theoptionsinsider.com/pro. And let's see who's joining us on the show today to turn it up to 11. First, let's go out to, I believe he's back in the Southern volatility mecca known as Austin. I guess we will find out. He is the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. He was traveling a little bit to the north. I think now he is back in the south. Mr. Meatball, how you doing, and where are you beaming at us from today?
Yes, I am back in Austin, Texas, and I'm happy to be here. And I'm excited to talk all things volatility because there is lots to discuss.
You've been in Texas like a year and change now, coming up on 2 years, I think. I still don't
years. In October, it'll be 2 years.
I still don't detect any hint of a drawl yet. What's going on? Where's the y'alls?
Every time I go to visit Chicago, it's like I haven't been gone because my accent just blows up to back to its former self.
I'm waiting for some all y'alls to hit the show. Then I'll know. Then I'll know you're a true Texan over there on the show. All right, and also joining us back in the MIAX hot seat once again, Mr. Tom JARCK, the Vice President of Proprietary Product Development over there at MIAX. So he's busy these days. Mr. Tom, welcome back to Volatility Views, sir.
Thank you, Mark. Thanks, guys. Happy to be here today. It's been a while. I just realized I haven't been on here in several months. Have you not invited me? I don't know.
It's that John Smolin. He's sucking up all the oxygen in the room, taking up all the guest spots these days. No, he was on once in the last year. It was fun.
And you had Matt on a couple weeks back too. So no, it's good. I'm looking forward to it. I've been pretty busy with a lot of conferences, just a lot of meetings, one-on-ones with different various folks in the industry. A lot of internal projects working on. And then, last week I thought I was escaping the heat. I went to Minneapolis to a charity golf outing. And actually I got to go see the MJEX, the Minneapolis Grain Exchange floor for the first time. It was really, really interesting. A lot of history there. But I thought I was escaping the heat, but it was just as hot there as it was here.
Nowhere to go to escape the heat. Unless you head down to maybe Simon's neck of the woods right now, who is beaming on next week to talk about all things spikes next week. But we got to get talking about all things spikes right now. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was, and indeed still is, from vol trading and trending and analysis and unusual activity, all sorts of fun perspectives. And coming into showtime, it's been pretty much this way for most of the week. We kind of bucked the trend a little bit yesterday, rallied, and then kind of sold off towards the end of the day. But today we're back firmly in rally mode. The market's firmly in the green again. S&P up over 1%, right about 1.1%. The NASDAQ up, closing in on 1.5%, about 1.4%. The Dow up about 0.85%. So firmly in the green yet again to end the week, which means our vol friends taking a bit of a hiatus, taking a bit of a siesta right now. Spikes, when we kicked off the show, flirting right with that 20 handle. Was flirting right around that 20 handle. That puts it down pretty much exactly 2 points from where it was this time last week. VIX Cash has broken it once again. It broke it earlier this week, got down to right about 1960 or so, then bounced back off of it yesterday. Back below 20 again, 19.25 when we kicked off the show. Down about 2.5 points from where it was this time last week. All this evolution of vol means our old friend VVIX, the vol of vol, getting a little bit frostier, getting a little bit juicier out there right now. It's up about 5 points to about a 90. Remember we said when it started dipping its toes into the 70 handle that if past is prologue, it probably won't hang out there for very long. And that was pre-pandemic, the last time we saw a 70 handle in VVIX. So the game is afoot. All things are on the table when we're in this post-pandemic world, but usually it doesn't hang out there for very long. That's pretty much what we're seeing again right now. VVIX at about a 90 again, up 5 points. Speaking of vol, the VSPKES, a.k.a. the Viking, also looking a little bit frothier this week as well, up to about a 103, up about almost 3.5 points from where it was this time last week, bouncing off the lows, the all-time lows that is set here on the show a couple of weeks ago. Let's go around the horn. Tom hasn't been on in a while, so we'll start with you. Mr. Tom, big developments going on in your neck of the woods. I mentioned Simon. He's coming on next week. We're going to do a deep dive into the new Spikes ETFs next week with Simon, so look forward to that. I do believe that will be post-launch. They are launching in between this show and next show, so that'll be interesting. So look forward to kind of a deep dive on that. We'll kind of table most of the conversation until we get to that next week. But I know, Tom, you're watching these things. You have some thoughts, anything you want to share ahead of the launch of these big ETFs, sir?
Thanks, Mark. one thing I do need to mention before I make any comments at all is that any views that I expressed today are my own as an officer of the Miami International Holdings, and I do not represent or reflect the views of anyone else, including Convexity shares. Also, please know that Miami International Holdings owns MIAX Futures, which is the majority owner of Convexity shares. Just had to throw that out there to be careful. So Convexity shares ETFs that have been mentioned on the show before. They track the T3 spike front 2 months futures index. We could see those start trading next week. That's been exciting, and it's been really something that we've been working on quite a bit. I can't. One thing I would love to talk about, if I can chime into it now or not, it's just something about the underlying indexes that a lot of the ETPs on volatility products track.
Let's dive into it now, baby.
Yeah, okay. And I'll talk quick because it could get lengthy, but so a lot of exchange traded products, as we know, they all track some kind of an underlying index, whether it's SPYs tracking SPX or the volatility on products on the VIX tracking their underlying index, and the ETFs on Uvxy shares are going to be tracking an index known as SPKF, and that is the it's basically the continuous rolling of the front month future into the second month future. So when in regular equity ETFs, you typically go through these rebalance periods. But with futures, because they expire, they have to be rolled, right? So one thing to be aware of, just in general, the mechanics, the way these different indices are calculated. Everyone has some different methodologies on how that roll takes place. If you look at the oil ETFs versus the volatility ETNs and ETFs and ETPs, there's a little bit different mechanisms. But in general, with any kind of exchange traded product, you need to make sure there is not a that creation is unlimited. So we recently saw that with VXX, where they kind of halted creations, and it's still trading at a premium. I think earlier today it was like 30%. I don't know where it is today. So that distorts any kind of an ETP from its tracking on its underlying index, which is benchmarked to. So that's always something to be aware of with any of the ETP products that are out there. Most of the like VIX related and the VIX related ETPs, most of them track the S&P 500 short-term futures index, while the Convexity shares ETFs will be benchmarked to the SPIKES futures short-term volatility index. As I mentioned before, the symbol on that is SPKF. There is on the T3index.com, there is a kind of a methodology guide on how that index works. But in general, what we're doing, what the index does to calculate it with the methodology, its inputs are the first and second month futures. So on the day before expiration of the futures, that index uses the full next term future. So that's 100% of the weight. And then every business day that goes by, it has to roll into the next month future, proportionally to the days left in that time period. With that creates a, the output of that, you get basically a weighted average futures price. And you have, the different percentage of futures that are held in the ETF or ETPs or whatever mechanism you're looking at. But the interesting thing about this is we often hear all these expressions about the roll down, the roll mechanism, roll yield. So with that, that's where the contango and the backwardation, I know you talk about a lot on the show, a lot about the term structure, has a really big impact in the performance of these different indices. Because if in a contango situation, the index for its calculation is constantly buying the second, it's a long position index that's benchmarked. So it's constantly buying that second month future and selling out the front month future. So in a contango environment, it's in theory, going to have a negative drag, which a lot of people call the roll yield. And I think right now it's like, 10% on the front month and 6 or so in the second 2 months. So a lot of people track that, and in a backwardation, it's kind of the opposite. You'd be buying a further dated future and selling a short dated future, but the longer dated would be at a discount. So that would add to performance of that index. But the caveat is always that when vol is very low, when you want to buy it, the contango is typically in place, and when vols are really high, the backwardation is typically in place. So they kind of negate one another somewhat. But there's a lot of good information on that on the methodology guide for that. But just wanted to kind of review that with everybody. Just hopefully that was somewhat clear.
That's a big preview here for the ETFs. They're launching the 16th. Is that the date, Tom?
That is the expected date.
Expected date, yes. So there you go, listeners. If you want more, hopefully by the next time we gather here together on the show, they will be live. We'll be doing a deep dive with the Spike's father himself on the show next week about all things ETFs and what's going on out there. So look forward to that. If you got questions, start getting them in. But Tom, as we roll off of the ETFs into what's lighting up our tape right now in the vol market, what is catching your eye out there this week, sir?
Well, obviously, just a big reversal, and the move's been lower, and it's kind of almost like a grind lower in vols the last month. And I mean, I guess just looking at the optics of what's going on in the world and in the markets, and you look at rate vols have come off quite a bit. Just with this, there's just been a much more, I guess, stable message out there. I think there's still a lot of risks looming in the market as always, but right now it just feels like there's risk on mentality, and people are putting money back into the equity markets, into the bond markets in general. You're seeing a decent as the markets, as volatility has been coming off and the market's been rallying, you're seeing skew catch a little bit of a bid, but I'm not in the daily flows as much anymore, so I'm not sure. Just looking at put call ratios, it doesn't seem like there's anything really going on there, but it's possible there's been some put hedges being picked up as we've been rallying back up. That's generally what you see. I'll turn it over to Mark on some of this, and we can come back.
Mr. Meatball, or the man beaming in from, as our chat says, Austin, which is now the new LA. I haven't thought of it that way, but interesting. What's catching your eye out there in the vol space this week, sir?
Yeah, they came in and have just kind of crushed vol. I was kind of waiting to see for today whether they really come after it, and they are. They're pummeling the VIX, pummeling spikes. Futures are, that AUG future only has a couple of days left, and it is still trading despite everything going on. When you look at the way the VIX is getting crushed, that AUG future is still trading at like a 1.25 premium. Now, we do have the weekend coming up, but they're pricing stuff there's still some upside risk here. But I'm with Tom. It's definitely risk off. I'll be interested to see whether end of the day there's some selling like there was yesterday. I think that could cause vol to absolutely get a bid. Very interested to see what happens there. But other than that, pretty interesting day.
Speaking of vol catching a bid, I was just noticing while we were talking here, our friends over there at Market Watch have been listening to Vol Views, obviously, because they just put out an article just a few minutes ago. Can the stock market reach a bottom without Wall Street's fear gauge hitting, quote, panic levels? So clearly those folks have been listening to Vol Views. Obviously, that's been a big talking point we've had on the show for the last couple of months. We've had multiple audience polls along those lines. Can you do it without hitting the quote-unquote capitulation level in VIX, whatever you think that is, 40, 50, 80, whatever your level is? Can we do it? If you're buying this rally right now, clearly you think the answer is yes, because we never got close to that in VIX land. Mr. Meatball, what do you think? The Market Watch folks clearly been listening to the show, sir.
Yeah, I mean, but that's a big $1 million question people have been asking for a while. Can we get there without a VIX explosion? And the answer has been, I think yes. I'm a little surprised we didn't even make a run of 40, but the sell-off was kind of slow and relentless, and they were just dumping stock. They weren't even bothering to hedge, and this rally has been pretty impressive.
If you're a big buyer of this rally, you're a believer, listeners, and you think we could get there without VIX really sniffing anything that you would traditionally term a capitulation, let alone some of the extreme levels some people were throwing around out there. Like, we have to get back to the crazy 2020 highs of VIX. We didn't even get anywhere near that, listeners. So intriguing stuff. But then again, the game is still afoot out there. We have no idea, obviously, what the future holds for this market. But today, at least, it's looking rally ho mode. Let's get out to the futures, see what the futures are telling us. And go figure, listeners. Spoiler alert, they're down. The AUG future, as Mark just mentioned, they are coming for that front future like it is completely worthless. 2.7 points to the dark side this week. SEP down almost as much. SEP down about 2.2 points when we kicked off the show. We're still looking at a nice little bit of juice there going out to November. So right now here between August and November, you're talking over 5 points, talking about 5.3 points out there, which is a heck of a bid. It's a pretty steep contango. But as we remarked on the show last week, what's also interesting and perhaps a bit disconcerting is that the bid doesn't go away after the November cycle. In the past, when people were very concerned about midterms, things like that, we saw the bid in that October timeframe, then it would kind of come off towards the end of the year. And instead, it stays at that level through December, and then it bids up. By the time you get to April, you're into a 28 handle again. So we are pricing a lot more juice in the future than we are right now, which is kind of intriguing. Tom, I'm curious for your thoughts out there looking at the volatility surface this week. This is something we remarked about on the show last week as well. This kind of the aggressive nature of the contango right now. It seems like they can't sell the front portion of the curve enough, and they can't bid up the back portion enough either. Kind of a tale of two markets. Depends where you look on the curve there, Tom.
Yeah, I feel like, some of that, we were going from from a extreme like bid to vol, not extreme, but decent bid to vol to a bit more of normalization, I guess, with everything coming off. So I think just when I look at it, I mean, it looks, obviously the overall levels are much higher, but it's just, to me, it's much more of a normal shape of the curve. And if you think about seasonality, typically we get this August, late August kind of dampening in vol, typically, not always, but and then there's always that, holding vol into the October fear and October earnings and different things like that. So, I think it's it doesn't seem all that abnormal to me based on just the market, moves. And I've noticed too that, the market rally, when you talk about, VIX and spikes and just all the, the impact on the futures curve and the contango, a lot of that is driven just from the rally higher in the equity markets, and you move to those, different strikes in the vol surface of the S&P and of the SPYs. So you get that, steeper term structure just from that in the volatility futures. But I did notice a little bit of, a little outperformance. I guess vol by strike, I feel like hasn't come off as much as, I always look at vol by strike a lot, and I've noticed vol by strike hasn't really gotten crushed. So a lot of the move has been more, like I said, from the equity markets moving higher to those higher strikes that are used to compute the volatility products.
Mr. Meatball, same question for you. We're still living in that intriguing territory where they're coming for the front portion of the curve, maintaining their bid for the back end. What are your thoughts out there, sir?
Yeah, I could not agree with Tom more. In fact, until today, the strike volatility was actually up a little bit. Today, it finally softened, but you can see that it's a clear sign the market doesn't trust the index and does not trust this rally, because they are really holding up the back end of the curve. And it is impressive how expensive the back months are.
Impressive is certainly one word for it. Let's get on out to the rest of the vol landscape. Now let's start in the vol options. Mr. Tom, I know you guys are really waiting for the ETPs to go online to really start kicking things into high gear from a volume perspective. But looks like we're getting some more paper floating on into the Spikes options, even ahead of the launch. Anything catching your eye out there in the land of Spikes options this week, sir?
Yeah, we've seen, it looks like a little pickup in some, I would probably call it more retail flow. And, some smaller activity in there, which has been good. And the market quality, that the market makers are providing in the spikes index options, it's definitely looks quite good. And where we've seen the prints go up, it's been pretty good trading levels. One thing that did hit the news last week was, and I noticed on their on Twitter, they've actually been pushing some stuff on there too. Posting some stuff. Excuse me. Webull, which is an independent, self-directed broker dealer, they're now offering spikes options on their trading platform. So they've been pointing that out to their client base, and they're going to be they're educating their client base on volatility. And volatility, trading spikes and what spikes is. So yeah, we're really happy that they have making that take that step. We do think there's a lot of opportunity in the personally in the retail world to be more familiar with yes, it's complex, but if you do your homework and you understand the different products, you can definitely use them to your advantage for both hedging and having a view. So that's been pretty exciting.
Let's see if things are exciting out there in the land of VIX options. And they kind of are. Seeing a little bit of paper, seeing a 300K handle on the tape today. I haven't seen that in a little bit. 334,000 on the tape right now. That looks even more impressive when I tell you what the ADV is, which is 427,000. That continues to go in the wrong direction. Down another 6,000 again this week. So at some point, they will cross and the ADV will go back up. For now, that is not the case. Maybe today will be that day, listeners. Before we get into the action this week, let's break down the top 10 size positions. What's open? What are the big dog positions out there in VIX options right now? Let's find out. By the way, listeners, it was 10-0 calls to puts pretty much the last couple of weeks out there. A very rare scenario. I haven't really seen that much on the show, really, ever. And that has finally broken this week. It is now 9 calls to 1 put in the top 10 there. So read into that what you will, listeners. It cost you 142,000 contracts to break into the top 10 again this week. That once again gets you to the AUG 75s. And once again, spoilers, it's going to be a lot of those kind of strikes, listeners. That's pretty much the game right now. Number 9, you got 144,000 of the AUG doubles, the AUG 55s. Number 8, $1.52, back to the 75s, this time in September. Number 7, 155,000 of the AUG 30s. Hope you enjoyed that, because that's pretty much all you're going to get. Number 6, $1.59 of the NOV 80s. Number 5, 160,000 of the SEP 50s. Number 4, our only put in the top 10 this week, listeners, 170,000 of the SEP 22 puts. So finally, we got a put strike breaking it into the top 10. That's interesting in and of itself. Number 3, and we got just a straight upside strip here for the rest, listeners. 200,000 exactly of the Mark 75s. Number 2, 203,000 of our old friends, the OX 75s. They were the former number 1. They've kind of been the reigning size position for a while. Not so much today. They have been usurped, listeners, by the NOV 70s. 225,000 of those now taking the top spot. So once again, the top positions in VIX just completely dominated by, shall we say, extreme out of the money call activity. Once again, a lot of people have been picking up this as well. People have been tweeting about it, the highest amount of far out of the money call open interest they've ever seen in VIX and things like that. It certainly is an intriguing time, listeners. Vol paper tends to go with trends and goes in ebbs and flows. And right now, clearly the trend is in favor of all the upside you could possibly have when it comes to VIX. Let's get out some of the paper that we saw lighting it up this week, such as it was. We actually had a few moments of activity there today. Like I said, 337,000 contracts, or 334,000, I should say, right now on the tape. The big dog today, the AUG 20 puts. So there are puts trading today, 42,000 of those. Followed by number 2, 20,000 of the AUG 32 halves. Number 3, 13,000, the SEP 35s. And then 4 and 5, we have the AUG 23 puts and the NOV 28 calls with about 13,000 each of those. Yesterday, a pretty light day, 300K exactly on the tape for VIX. You can see now why that ADV continues to erode, even though we had some prints yesterday. The big print yesterday, 16,500 of the AUG 21 puts and 11,000 of the AUG 22 calls. 10,000 for number 3 of the SEP 22 puts, and everything else is below 10,000 contract listeners. Wednesday was the big dog day of the week. We'll see if today can rival it. 562,000 contracts on the tape for Wednesday. The big trade, again, these AUG 22 puts, 36, almost 37,000 of those going up, then followed by 27,000 of the SEP 22 puts. So maybe a bit of a roll there. The size discrepancy, if it was a roll, would maybe indicate not exactly a house money roll. If you've been listening to the network for a while, you know what that means, listeners. Number 3, 27,000. Oh, here we go. October pars, the 100s. There we go. That's the kind of paper I know and love out here in VIX land these days. Number 4, we got 24,000 of the D's 40s. And rounding out the top 5 on Wednesday, 23,000 of the August 20s. So people will trade calls with a 20 handle these days, just not for exorbitant size. Tuesday, 364,000 contracts on the tape. The big dog, 24,000 of the AUG 30s, followed by 20,000 of the SEP 22 puts, 20,000 as well of the AUG 35 calls. So number 3, 11,000 of the AUG 21 puts for number 4, and then 11,000 as well for number 5 of the AUG 32 halves. Monday, kind of split in the uprights, not super active, but not super quiet either. 406,000 contracts on the tape. The big dog on Monday, 27,000. Again, AUG 22 puts. They've kind of been lighting it up all week. Followed by 18,000 of the SEP 75, so right back at it. Number 3, 16,000 of the AUG 70s. Number 4, 13,000 of the AUG 30s. And rounding out the top 5 on a decently active Monday, 12,000 of the AUG 32 halves. Mr. Meatball, kind of an anemic week out there, but we did see some pockets of activity, including some folks clearly liking the 22 strike again. What was catching your eye out there in VIX options this week, sir?
Yeah, it was a slow week. No like giant trades, nothing that would make your eyes pop. Really just the function of long puts and the way they've paid out. Even today on a day VIX is getting smashed, we're seeing traders take profits on the August 20 puts and the August 21 puts. And the biggest trade of the day is someone paid 4 cents for the August 32 and a halves, and small amount of that no 40-60 call buyer back in there. But it has just been slow as slow can be this week for vol. Not a lot of interest. Just some flyer, just profit taking in August and flyers on vol potentially dropping lower.
Speaking of dropping lower, let's go out to the other vol ETPs out there, starting with SVIX, of course, our old friend, the inverse VIX product out there. SVIX, this is one that kind of got all the headlines when they launched, and it hasn't really been doing a lot of paper except for maybe today. Maybe today the worm is turning out there. SVIX, by the way, at a 14 right now, up 1. So as VIX drops, SVIX getting frothier, getting juicier out there. The ADV is about 730, so that hasn't really changed. But today, so far, blowing the doors off, at least from an SVIX perspective, with over 1,200 contracts on the tape in SVIX. This has got to be one of the busiest days we've ever seen out there. We'll get to what's lighting it up out there in a second. First, let's do a quick top 5 for the size positions. Looks like we got the SEP 13s still out here for the number 1 position in SVIX right now. SEP 13s, 1,380 of those, which doesn't sound like a lot, but when you're doing 700 contracts a day, it's actually a ton. Number 2, we got 971 of the AUG 12 puts. Number 3, 600 of the AUG 13 puts. Number 4, 600 as well of the March 8 puts. And number 5, we have a whopping 358 of the AUG 9 puts. But intriguing, today we're seeing some paper on the tape. Let's go see what's lighting it up out there today. Looks like maybe a bit of a three-way going up here. We got 258 of the AUG 13 puts against maybe 232 of the AUG 14 puts and 222 of the AUG 12 puts. So you got pretty much 750 contracts going up right there. Let's pull it up really quickly to see if that all went. Yeah, it all went up pretty much. Actually, no. Looks like the 12 and 13 puts went up as a spread. And then, so we didn't see the other ones until later. The 14 puts, though, looks like they went up perhaps more recently because we weren't seeing those. Those have gone up in just chunks, 40 lots. They're going up right now as we speak, actually. So looks like it was a 12-13 put spread paper buying the 13s, selling the 12s, doing that for a whopping 11 cents. And then against that maybe, or just to add joy to the fun, putting up a bunch of over 200, which again, for this name is a ton of these AUG14 puts. Mr. Meatball, we've been talking for a while that SVIX hasn't really been putting up the numbers to match the interest in this thing. Seems like today may be the exception. You slinging any SVIX out there today? What do you think of this put palooza, sir?
I did buy some SVIX ETP earlier this late last week. But yeah, it's interesting. We're seeing some big in the money put trading in SVIX. It looks like they're like selling puts to essentially try and own the stock or taking some premium. Really interesting stuff. They're selling them basically at parity, but looking for all this is pointing toward a potential move higher for SVIX if what they're doing is just unloading puts, kind of essentially synthetic long the stock. Interesting stuff. They got the AUG 14s trading 30 that just went up a bunch. Some of the AUG 13s and 12s sold as well. Really unique. I don't love the paper, but it is what it is.
It is what it is, indeed. Let's go out to its sibling out there, which is UVIX, which is, of course, the levered VIX ETP listeners. 870 when we kicked off the show, down over 1, not quite 2, about 1.6 handles on the week. ADV hanging out right around the 4,800, 4,900 level that's been at for a while. But we're seeing it threaten that already today. So seeing some paper out here in these newer VIX ETPs today. 4,425 on the tape today. Let's do a quick top 5 out here for UVIX as well. Number 1 out here in UVIX, AUG 13 puts, 3,670 of those, followed by number 2, 3,500 of the AUG 14 calls. Number 3, about 3,000 of the AUG 11 puts. Number 4, 2,300 of the AUG 13 calls. And rounding out the top 5 in UVIX this week, 2,100 of the AUG 10 calls. But getting out to the most active today, and again, we're seeing well over 4,000 contracts on the tape already. So that's going to be a pretty active day out here in UVIX. Seems like some days folks just discover UVIX and it puts up some numbers, and today looks like might be one of those days. Nearly 1,000 already up today of the AUG 11s. We're actually hanging out well south of the 11s, so intriguing that the 11s would be lighting it up. Nearly 1,000 of those today, followed by the AUG 10s, 550 of those, SEP 12s, about 500 of those, and the AUG 9s, almost 500 of those as well today. And then the SEP 10s bring up the rear of the top 5 today with about 230. Let's just look really quickly if I can see any crazy. It doesn't look like they went up in a spread. There were just a lot of those 11 calls trading over and over. Doesn't seem like it was spread activity. These aren't the weeklies, so you'd expect this on the weekly expiration. Folks are taking some up. These are the monthlies. So just one of those days, listeners. A lot of paper lighting it up out there today. Mr. Meatball, I know you were more intrigued by UVIX than SVIX. This paper today would maybe seem to agree with that. What are your thoughts here on UVIX this week?
Yeah, I really like the way UVIX has come along. Markets have really tightened up. You can trade everything kind of in and out now. It's becoming a tradable product. We're seeing options volume increase. Stock activity has been pretty good in UVIX. So across the board, this is turning into a pretty healthy product, and that is a good thing. And that makes me hopeful for the spikes, the soon to be released spikes ETPs.
Yes, the folks are trading it up out here, which is intriguing. Hopefully we'll have some data in our hot little hands on the show this time next week. Speaking of hot little hands, I'm not sure if this one is really in them anymore or not, but it's our old friend VXX. It's kind of just drifting along its own way while the rest of the vol space is getting annihilated. VXX is up today. Why not? Up about 0.75 of a point almost to 2190, because that's what you want if you're holding VXX today. That's why probably no one's trading it yet again. Only 34,000 contracts on the tape today. The ADV is down to 72,000, down another 5,000. So apparently it hasn't hit its equilibrium yet. It will continue to erode. I'm not going to waste your time with what's trading today, but there is something of note. For the last, ever since this whole Barclays debacle began, we've seen nothing but puts in the top 10. 10-0, puts. All anybody wants to touch out there is puts, for obvious reasons, listeners. But it has been doing weird stuff like what it's doing today out there today. Maybe an argument maybe you might want to call out here. And that looks like someone has heeded that argument because number 10 at the very bottom of the top 10 in VXX right now, we finally have found our first call. It is the October 40s. I don't know if you want the 40s. And maybe I take back what I said. 14,646 of these bad boys, to be precise. So there you go, Mr. Meatball. We have finally found a call in VXX, and it's the OC 40s. What say you, sir?
Well, I don't know, man. I no, absolutely not. Stay away. That is, I don't know who's buying those, but the fact that the OC 47s are 20-cent bid or the 52s are 15-cent bid just shows me the fear around this thing with a short squeeze. Vol is definitely up in this thing, and like significantly. And so, you have to wonder whether there's some sort of round 2 short squeeze coming for VXX.
Well, our friend in the OC 40s, if he was buying them, and if past his prologue in the vol space, probably, then maybe he is betting on it. That'd be a hell of a squeeze. If VXX got to 40 while VIX and the other products were languishing in the mid to high teens, that would certainly be an intriguing scenario. And it would certainly be unwelcome news to everybody who's hanging out there in the puts and have been for some, including our friend who has over 100,000 of the AUG 16 puts. Good thing you didn't pile into those, Mark. We were joking about those, about a month ago on the show. It's maybe a fun flyer. Clearly not going to happen, especially with it rallying today. So, yeah, it looks like 100,000 of those, plus all the other paper here in the top 10 going to go the way of the dodo if we see a short squeeze out here. Speaking of things that are just getting squeezed in the other direction, we got UVXY continues to vanish before our eyes, listeners. At an 880 when we kicked off the show, down about 1.6 handles from this time last week as well. That ADV, it's up to 284,000. It's up another 11,000 over the course of this past week. So you folks are certainly slinging some UVXY. So you have not been listening to our admonitions to maybe stay clear when it gets shy of the 10 handle, because weird things tend to happen when it gets shy of the 10 handle, because everyone knows that reverse split is happening sometime. Obviously, nothing's been announced yet, but an 8 handle, it's very rare to see an 8 handle in UVXY for a sustained period of time. Yet that's where we are right now. Today, 191,000 contracts on the tape. So UVXY continuing to trade it up out here. Let's look really quickly. Let's do a top 5 out here. So I want to get some of your questions here on the show as well. Number 1 is the AUG 9s, 30,000 of those. Number 2, 29,000 of the AUG 10s. Number 3, 27,000 of the AUG 9 halves. Number 4, 19,500 of the AUG 8 half puts. And number 5, 17,000 of the AUG 10 calls. By the way, the 10 calls and the 9 half calls are both expiring today. The rest are all traditional monthlies out here. Let's get out to what's trading today. Go figure. It's all stuff expiring today that's lighting it up. In particular, about 17,000 of the AUG 9 calls for the number 1 spot, and about 12,000 of the AUG 9 puts. Again, both expiring today for the number 2 spot out there. So we are flirting with that 9 handle. If you got some 9 calls or puts expiring today, might want to trade it up. That's what folks are doing out there. Mr. Meatball, are you starting to get any whiffs, any hints that the reverse split is imminent out there for UVXY, sir, as we get perilously below the 10 handle?
I've not heard anything yet, but it's coming. It is coming.
And you know what else is coming? It's your mail. We'll get there really quickly, listeners. First, really quickly, we've got some earnings still to pay off. Palantir was Monday, Coinbase, Roblox, Wynn Resorts Tuesday, Jack in the Box, Wendy's, Fox, and Disney, and Bumble on Wednesday. Thursday, Six Flags, Rivian, Canada Goose Holdings, and today, no big names today, but we have updated earnings move results, and earnings season reports for you guys from our friends over there at ORATS. You know where to go. TheOptionsInsider.com is the place to go to get access to all that great data. Hey, you can't beat the price. It is free because we like you folks so much. You want to see how all these names performed, how they've done in the past, how it compares and shapes up. We even do some special in-depth ones that we put out on the site and on Twitter that are much deeper dives into single names with all the data you could possibly want, and probably a whole bunch more on top of that. So check those out. Rivian was one a lot of people were looking at out here. Look really quickly. They were popping off yesterday after the bell. Man, what a dumpster fire this name has been. They, of course, took Ford to great heights and then kind of annihilated them. August 11th, yesterday, after the bell, 36.70 is where they were going into their announcement. They're pricing in $4.06. They delivered $4.38, so they kind of came in line with that a little bit. Actually, no, I take that back. They were pricing in $4.38. In the past, they've moved about $4. They're pricing a little bit more. We don't have the updated results reports yet. That'll be coming in soon. But looks like Rivian actually kind of unched after a bit of a wild move in the morning. They hemorrhaged a ton of money. They lost $1.7 billion in Q2. $1.7 billion. Most companies never earn that in their entire existence. And they hemorrhaged that in a single quarter. And yet the stock is unched right now, listeners. So that kind of goes to show you where we are in the electric vehicle space right now. But my goodness, you have to work hard to lose nearly $2 billion. When you're a company that's even the size of Rivian, they aren't that big. To shed that much money is almost an impressive feat in and of itself out there. But we got to keep on rolling. You guys have questions, you know where to go. Check out all those reports for yourselves. It is time for the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, a lot to squeeze in here to this segment. First, let's pay off our questions of the week. We have a twofer this week, but let's start with the vol one. Let's go. Volatility has many different causes. However, which of the following factors do you feel is the primary driver of the current vol environment? Gave you three choices plus the infamous other. Earnings season, the Fed, Ukraine, or other. And then we'll just throw the other one in there as well. We've seen an explosion of call options paper in GameStop and AMC and BBig and all these names you may have heard of last year, which raises the question, is the meme stock frenzy back? Yes or no? Let's go out to the MIAX hot seat. Let's go to Mr. Tom. Two questions for you there, Mr. Tom. First off, which of those factors do you think is the primary driver of the vol environment right now? Or maybe you have your own other you want to suggest. And then also, do you think the meme stock frenzy is back? And then more importantly, what do you think our audience is voting for in both of those, sir?
For me, I think the Fed is one of the biggest components to the current environment, but obviously everything has an impact, whether it's, commodity prices, war in Ukraine, China tensions over Taiwan, like everything has a factor. But in this case, I recently, I think it's mostly on the Fed. As far as the meme stock frenzy, I don't really have a strong opinion on that. I have seen, obviously, these headlines coming through and seen some of the volume, the explosion of the volumes again. So, I mean, I don't follow Reddit. I don't know if those guys are out there and talking about it much, but yeah, I mean, it does seem, based on those names that they're coming back. And then what do I think the audience? I think the audience would also say that, it's the Fed, and I think they would say that, yes, there is a meme stock frenzy going on.
It's like our audience or something, sir. Mr. Meatball, same questions for you. What's driving the vol, and is the meme stock frenzy back, yes or no?
The Fed is driving the vol, and the meme stock frenzy is not back. It may try and give a little visit, or maybe it'll video call and say hello, but it is not back. That money is just gone.
It's a Zoom call from the meme stock frenzy. Is that what this is? I like that. The meme stock Zoom call coming to a trading screen near you. Right now, 62.5% of you saying the Fed is driving the vol, so you agree with us here. 25% saying other, but not many of you giving what your other is. What is your other? I want to hear what it is. 8.3% of you saying earnings season, 4.2% only saying the old Ukraine. And again, both of these are going out in, you got about 4 hours on both of these, so you might have a chance on the podcast. Probably not, because we have options oddities coming up later. So that's why you want to get on over to Add Options during the week and make your voice heard, listeners. Our second question of the week, the explosion of call paper in the meme stock frenzy. 69% of you saying yes, the meme stock frenzy is back. No, 31%. That's got a few hours left as well. Add Options is the place to go. Folks listening to the show here, like F Contango Trader, you heard us saying about the vol by strike still looking frothy, and also the back end of the VIX futures curve still holding a bid. He said That's a perfect scenario to hold a collar and have some back. I think it means back of the pocket, back in the pocket, out of the money calendars, overall delta neutral portfolio. Yeah, that certainly makes some sense. Scott Somer here chiming in. He wants us on YouTube. A lot of you listening on YouTube. If you like listening on YouTube, have at it, enjoy it. He says, can you guys arrange to record a VolView show from the latest VVIX trading pit? I don't know if that's going to happen, Scott, for a variety of reasons, not the least of which that, people are actually trading there. I'm not sure they want us recording a show in the middle of it. Maybe after hours. I don't know. Probably not going to happen, though. I don't think, Scott. It's an intriguing idea, but probably not going to happen. Let's get out to Moses. Moses David. He's in trouble. He needs our help. Moses David says, hey, guys, I'm stuck in a trade in UVIX with 3,700 shares at 13.09. Let's see. Where's our friend UVIX hanging out right now? 874. He says losses. I think it means losses are tough. I'm considering taking it home and sink in depression for weeks. Oh, don't do that, Moses. He says, any insights that could spread some hope? So, Mr. Meatball, looks like this person dove into a fairly sizable position in UVIX, and now it is over 4 handles against him. I mean, at that point, I'm not sure what you can do, but any thoughts, maybe any words of encouragement here for Moses, who's about to sink into a deep depression?
You could go out and buy a ton of out of the money puts against your position, and then as this thing sinks, you'll start making money instead of eating it. But this is one of those where you just take your licks, call it a day, and move on. If you're thinking this thing is going to run hot, wait until the VIX curve flattens up before you jump back in. This is a trading product, not an investing product. So, that's a tough news, and I'm sorry, but the savior doesn't look like they're walking through that door right now. And you're waiting for a vol event, and by the time it happens, this thing will be $4, and you're not going to make any money. So I would just, and if I was in your shoes, what I would do is probably dump it, maybe place some puts, and then look for an opportunity to go long when the market actually says it's time to go long.
Yeah, sometimes it's not the answer people want to hear, but sometimes you have to take your lumps on the. And you're right, this is such a highly trading product that you can't even do what maybe you would do in a traditional, let's say, an equity where you're getting beat up. You think it might revert over time. You maybe put on like a 1x2 stock repair against that position. You can maybe make some of that money back if it reverts. You can't even really do that in UVIX because it is such a day-to-day trading product. So yeah, unfortunately, Moses, that's kind of it. Now, no, Tom, anything you want to add here for Moses who's about to slink into a deep depression?
Well, I would agree with you that you shouldn't sink into deep depression. And I can't really advise on it, but one thing I will say is that I agree with both of you. These are trading products, not really meant to be bought and held for too long of a period. But again, I don't, you say is a big sizable trade. I don't know, Mr. Moses' position. This could be a pimple to his portfolio. I guess it really also depends on what was the for this bet size, what was the reason for the trade? So is it some kind of a hedge? Is it just a speculation? But yeah, I don't really have much to add there. I think I think Mark said things pretty well.
Yeah, not the advice you wanted to hear, I'm sure, Moses. But I wish we had a magic pill for you that could fix that. Unfortunately, that's not the case. But let us know what you end up doing. And yeah, don't sink into a depression. Hit us up. We'll talk you through it. We'll keep you hopefully a little bit less depressed as we keep on rolling into our final segment. Maybe all of us are about to get depressed. Let's find out. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, another week, another pretty much bullseye, but not for myself, but for the meatball this week. Once again, our guests knocking it out of the park. The once in future and now present Dr. VIX was on the show. He did his Joan Rivers impersonation. He was my sidekick for all the shows. He did 3 shows back to back last week, which is always fun. He came in once again at that Prince level that the Rock Lobster was at a couple of weeks ago, the 1999. He wanted to party like it was 1999 as well. And you know what? Lo and behold, that one worked out because Spikes and VIX are pretty much back to exactly where we were at the start of the show. Spikes is pretty much right about a 20.04. So he's 0.05 away in Spikes. So he gets a bullseye here for Mr. Once and Future Dr. VIX. So we have two guest bullseye this year, one from him and one from Matt Amberson. I have a couple. I think Meatball has one. We have an official tally somewhere. We will add Mr. Rhodes to the tally. The rest of us, not close. I was at 21.85. I thought we would be down here earlier in the week, but then I thought something would conspire to get us back. And we saw that briefly, but it didn't have enough oomph to it to get us back to where I needed to be. And then, of course, Mr. Meatball doing his ducks of 22.22. No love there as well. So, Mr. Tom, that's actually a boon for you because when our guest wins, he's not on to celebrate the week after. So you get to bask in that glory a little bit. And also you get to go first. What are you feeling for this time next week, sir? And enjoy that reflected glow of that bullseye, sir. They are rare. If this thing continues, it's going to be pretty low. But I don't know. I feel like this 20 handle is going to be is going to be kind of the inflection point here. So I'm going to stick with I'm going to go to 20 in the Spikes. 20 exactly again. So we are not moving an iota this time next week. Yeah, I can see there's a lot of consternation around this level. So I could certainly see us maybe being glued there. I was the next closest, so I guess close in air quotes. I was almost 2 handles away, but I will take it. I shall go next. And, that's the question now, right? This inflection point of 20, we're hanging around it. VIX is below it. Will we continue to drive lower? Will we get sucked back up? Tom thinks it's going to be kind of the high gamma spot. It's going to suck us right to it. Or will we break through it again to the upside? I might still, I don't know, maybe it's just throwing good money after bad at this point, even though I have had some bullseyes with this. But I'm still feeling north of the 20 handle again this time next week. I'm going to say ever so briefly, I'm going to say 20.75 for this time next week. All right, Mr. Meatball, you got a 3/4 wide market. You want to go inside it, or are you going to do some crazy palindromic outside of it nonsense number?
Well, I'll recall that I would have had a bullseye if you'd not accused me of carping last week, which I was.
What was you were like 2 cents away from Russell. You're right.
1919. I was, I believe.
I think you were like
1929.
You were like 20. So, I thought you were like 20 because he was 1999. So you were like 2002 or something. I thought something like that.
Oh, maybe you're right. All right. Well, I'm going to go with. I think we're going to see VIX soften up maybe early next week. But going into options X, I think you're going to see some selling. What are the two guesses right now? 20
even and a 20.75. One of those is right. I won't say which one.
I'm going to go. Oh, let's go crazy. Let's give it a shot. 18.18.
Oh, interesting. An interesting year. Is it an interesting vol prognostication? I guess we shall find out, listener. That's your market for this week. 18.18 on the dark side. Tom feeling the Goldilocks in the middle at a 20, and myself at a 20.75. All right, everybody. That's going to do it for Volatility Views this week. For all of you on-demand folks, it's also going to do it for our broadcast week. Thank you for joining us, for tuning in, for listening, for retweeting, for listening to all the fun shows. However you get them. If you like what you hear, keep rating and reviewing. It does help all the new folks discover the content. But before we go, let's go back around the horn. Let's start with Tom. Tom, big stuff brewing in the land of spikes. If folks want to go check it out, where should they go? What should they do?
They should go to MIAXoptions.com/spikes. And then I mentioned earlier in the show about the SPKF index methodology. That can be found on T3index.com. Thank you.
T3 Index for Simon stuff, and of course, MIAXoptions.com/spikes. Looking at our live chat, like I got a lot of guesses in the teen handle. Only see one of the 20 handle. So intriguing stuff. Are you feeling lower? Are you feeling higher? Get your prognostication in, listeners. You could win fabulous prize. I didn't look at the listeners actually this week. Our producers do. I did not look on the show. I don't see off the top of my head. They usually surface the closest ones. I don't see any bullseyes this week. I don't see anything with exactly a 20 handle. We got a 26s. A lot of people all over the place. But yeah, get those prognostications in. It costs you nothing, and maybe you win some fabulous prizes. All right, Mr. Meatball. If folks want to check out all you have cooking in the land of the pit, where should they go? What should they do?
Go to optionpit.com. I'm writing stuff on VIX, volatility, spikes, you name it, every day in the VIX Edge blog. Come and read it, and you'll learn everything you need to know about trading volatility and take advantage of this market.
There you go. Check out the VIX Edge blog over there at Option Pit. Like I said, that's going to do it for us on the on-demand side. All you pro folks, hang out, have some fun stuff in there. Back in a little bit with options oddities to break down the mad week. Spoiler alert, that PCT seems like it's moving. I got a feeling the Rock Lobster I'm assuming is going to want to talk about that and a whole bunch of other unusual activity. Stay tuned for that. If you're not listening to that yet, theoptionsinsider.com/pro is the place to go to get access to that. And we're back again next Monday with all of our usual raft of programming all the way through to Friday. Another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPIKES Volatility products. SPIKES options and futures are traded on the SPIKES Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about SPIKES at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.